Welcome to Module 6. In this module, we're going to discuss the TNT strategy called Ideal CT. That means counter trend. Basically, what happens in this is that you have a shade which is opposite of the V trend. So this classifies it as a counter trend strategy. Let's go through this strategy background. The very first thing, as I mentioned before, is that the shade is going to be opposite of the V trend. So this classifies it as a counter trend strategy. Second, this has two targets. The very first one is the blue cross targets, which is very simple. But the second target you have to look for, which is the origin of the original trend. You have to find that, and you have to see which one price is going to encounter first. Wherever that's at, you want to measure the reward risk. And if the reward risk is 5 to 1 or more, now you can proceed forward with putting on the trade. If it's less, then you really don't want to waste time putting on that trade at all. Let's step through an example. This is step 1, is to find a TNT with a shade. Once you found that, now you're going to proceed forward. In this example here, the shade, which is green, is opposite of the V trend, which is bearish. So this is counter trend. If the V trend was in the direction of the green shade, this would have been the ideal TNT strategy, which we just discussed in Module 5. So the only difference between Module 5 and 6 here is that this V trend is opposite of the green shade. Step 2 is now to place the orders. So we're going to place a buy order at the blue dot, which is right there. We're going to put a sell conditional stop order at the red dot, which is right there. Now, remember, we have two different types of target. There's one target there, and now you have to find the origin of the original trend. If you look here, this is a upward movement here. This is the V trend is bearish. So you got to find out where the beginning of the bearish trend is. And if you look backwards, you'll see it roughly right there. So you could see that this is the origin of the bearish trend, which is before the blue crosses. That means we're going to get there before we get the blue crosses, and we have to pay attention to that. Step 3 is to calculate the reward risk. Remember, if we don't see a reward risk 5 to 1 or more, it's not worth our time taking this counter trend strategy at all. So there's our entry, there's our conditional stop. And now what I'm going to do is for my target, the first target, I'm going to choose the very first one, which is the origin of that trend there. So if you look, this is close to a 5 to 1 reward risk ratio. So now I have permission to place the order and see if it's going to enter. Step 4 is to see if we entered. If we didn't enter, we'll cancel the orders and move on. In this case, we did enter and we closed above our entry. So this is a profitable bar, so we stayed in this trade. Also, the shade was there, so that made us stay in this trade. Step 5 is to validate the second bar since we stayed in this trade. On the second bar, the V closes above the entry since this is bullish, and we still have the shade, so we're going to stay in this trade, and it now passed the 2-bar validation. Step 6 is to adjust our stop if we want. Okay, we could adjust our stop to the entry to make this a break-even trade, or we could keep our existing stop right there. Step 7, we'll stay in this trade until the blue line disappears at the end of the bar. And you could see the blue line here appeared when the third bar started, and also the black arrow appeared. Okay, along the way, we can adjust our stops if we want, if we get a TNT bar or orange bar along the way. In this example, we did not. Also, when you get to the target here, which is step 9, you could take 50 to 75% of your positions off. If not, you could even take all of them off. Notice one thing as we proceed forward. You could see in the dashboard here, this tells you this is a free trade, reason why the blue line is going up. So if you ever don't remember the steps, you could always look at the dashboard as you move forward. And then the last step, which is step 10, Here, you're going to exit the trade once the blue line disappears at the end of the bar. This bar still had the blue line here. At the end of this bar here, the blue line disappeared, so you would exit the trade right there. This now concludes Module 6, where we discussed the TNT strategy called Ideal CT. Remember, the only thing different between this strategy and the trend strategy was that the V trend was the opposite of the shade color. And when that happened, this is counter trend. And what you have to do is take an extra step in that you have to find the origin of the original trend and look at the reward risk to see if it's even worth taking or not.